Welcome to the first market summary of the new year and best wishes from all the team at My Wealth. As you can see from the accompanying table, the champagne corks weren't exactly popping as it was a quiet end to a horrible year, and one that I think most of us would be pleased to see the back of. Now, although it was a quiet end for global equity markets, there were plenty of positive developments, including the UK approval of the Oxford AstraZeneca coronavirus vaccine, which is better suited to rapid mass vaccination than the Pfizer vaccine, meaning there is a good chance that the majority of the UK population could be immunised by the summer, and the start of the rollout of the Pfizer vaccine across the European Union, which should help global equity markets extend the recent rally into this new year. In addition, we had a Brexit trade agreement, and while it could have been better for UK companies, it does remove much of the uncertainty over the future trading relationship with the EU. The agreement strengthened the pound to $1.36.72, its highest level since April 2018. But of course, what is good for the pound is bad for the FTSE 100, as around 2/3 of the FTSE 100's total revenue is derived from abroad, and so a strong pound is negative for the FTSE 100 as it reduces returns for exporters and the value of overseas earnings. Hence why the FTSE 100 was among the worst performers over the week, falling 0.64 of 1%. However, the biggest excitement was news that Donald Trump signed a $2.3 trillion stimulus package, which could increase fiscal aid for most Americans to $2,000 from $600, which would help the US economic recovery to regain its momentum. Now, although the package was blocked by Senate Majority Leader Mitch McConnell, it simply puts more focus on this week's Senate runoff elections in the state of Georgia. If the Democrats win the 2 seats, it would flip the control of the Senate for at least the next 2 years and results in the Democrats controlling both houses of Congress and the White House, and would mean we are likely to see an even larger stimulus package than the current $2.3 trillion proposal. Looking ahead this week, as we've just said, our eyes will be focused on Tuesday's runoff elections in Georgia. Data-wise, of most interest to us will be the weekly US jobless claims data on Thursday and the US employment data, non-farm payrolls or employment rate, participation rate and average earnings on Friday, given the recent stricter lockdown restrictions. Other US data includes Institute for Supply Management and factory orders. Elsewhere, we have Eurozone CPI inflation and retail sales and Chinese Caixin Purchasing Managers Index PMI.